value packed. Thank you everyone for tuning in. We are going to do the following for the next about 23-ish minutes. We have some very interesting questions teed up. Feel free to add questions in the Q&A here. We'll try to hit the most common ones at the end. But today we're going to go through an overview of what you need to know, the essentials for how to stay compliant with taxes in the US. And what I mean by staying compliant is no one here wants to face fines with the IRS. So we're going to walk through how taxes work in the US and how to avoid fines, stay compliant, have peace of mind. Then we're going to talk about something fun, business expenses. What can you expense? How can you save money on taxes? How can you save money as a business? Are there certain things which you're paying for personally, which you should put through your business account, which can help you reduce costs or have tax benefits? And then the last thing, we'll touch on sales tax. Everyone wants to make sure that they're paying sales tax properly or collecting that properly too. Without further ado, I'm going to get the first question going for Jiv, who is the in-house tax expert at Doola. Jiv, love the hat as well. I got the t-shirt on, Jiv has the hat on. So we have Doola swag. We will be starting to ship Doola swag internationally too. So we would love to see folks wearing that. Let's start off with question number one. Jiv, how does the US tax system work? Am I taxed when I withdraw money or when I send money overseas?
Yeah, I think, so again, a question that's been coming up, obviously now that we're in tax season and a lot of owners are starting to pay themselves. It kind of depends on what kind of business you are, but the general rule is, here in the US, in comparison to a lot of countries, in contrast, I guess, to a lot of countries in the world, our taxing authorities generally tax you based on the earnings of your company. And I think what trips a lot of international owners up is, the idea that, if I leave the money I make in the United States, if I just leave it in my US bank account, right? I don't have to tax, it doesn't have to be taxed, right? It can just sit there in the US and it ultimately never has to be reported. The reality is here in the US, we tax kind of based on the taxable earnings and taxable income. So what that means is, let's say that you're, I think the most common example so far that we get a normal question about is a partnerships, right? Let's just say there's a partnership of two people, both of them are foreign owners, and they make $10,000 during the year. Each of them own 50% of the company. A common question and a misconception is they think that if they just leave the $10,000 in the US, well, we didn't pay ourselves anything, so we don't have to pay any taxes. But that's not how it works here in the US. You get taxed on the earnings. So even if they didn't pay themselves, portions of that income at the end of the year, or send it back to themselves in, the foreign country that they live in, the IRS still expects them to pay taxes on, their 50% split of the net income of the year, right? So that's just, I think, probably the most important, distinction between the US and a lot of other countries around the world. For the most part, we're taxed on earnings, even if it's not necessarily correlated with the actual cash you're paying yourself out of your company, right? So that was, I think, the main thing I wanted to hit with this question for sure. Just because I know that a lot of owners have been asking this.
Okay, I'm going to ask one more meta question here, Jiv. Can you clarify for everyone when tax filings are due? In terms of when you formed your company, just top level, it's February 2023. Depending on when you formed your company, when do you have a filing due, or when are you okay for the next year?
Yeah, so filings are due here in the US, our normal tax year is January 1st to December 31st, right? So just to use 2022 as an example, it ultimately depends on what kind of entity you are, your due date for tax filing. So if you're a corporation, a C Corp, right? Some of our clients are, your due date is coming up. And if you haven't scheduled a meeting with your CPA, please schedule a meeting, because the due date for the C Corps from 2022 is going to be March 15th, 2023. So exactly 1 month from now. If you are a disregarded entity, foreign owned disregarded entity, any LLCs, all of your tax filings are going to be due 2 months from now, April 15th, 2023, and that's for the tax year of 2022, right? So that's kind of the timing. It's always the next spring that after the year when taxes are due.
Okay, so Got that here. There were two questions which actually came in around the tax date, so I hope that answered those specifically. Now we're going to jump into the second set of questions. We're going to do this rapid fire lightning style. I'm going to put Jiv on the hot seat, and we're going to talk through what types of expenses can be claimed as business expenses. So Jiv, I'm going to name a category, and then you can give a rapid fire answer. You ready?
Yeah, sure. Yeah, that sounds fun.
Cool. Number one, flights.
Yeah, business owners, if you're paying for flights, maybe to go do business in a different country, or even taking a flight here to maybe solicit clientele here in the US, yeah, that's absolutely a deductible expense as long as it's for business purposes, and a majority of the trip is actually for doing
Okay.
business or increasing your business. Yeah.
Okay, so flights are deductible, are claimable. What's the right word there? Deductible, claimable, expensible?
Deductible. Yeah, I think deductible. That's the good word.
Okay, I'm going to write these down as we go here. Flights are deductible. Next question, startup costs,
Yeah,
i.e. paying doula to start a company.
a tricky one because the IRS has changed these in the past a couple of years. So normally, right, if you're paying for things before your business starts, and this is one that kind of requires a slight explanation, but it is like, every single person in this call is going to have this as an expense, right? Um, but basically, the IRS says, any cost before your business starts are normally, not deductible. But if they are related to organizing your business, or starting up your business, such as paying doula or paying the state's fees to kind of get your business up and running, those are deductible in your first year of business, up to $5,000. So for sure, that initial kind of cost for opening up your business, if you're on one of our bundling or subscriptions, that's going to be, entirely deductible for that first year that you're in business.
Let's get that straight. That means your LLC formation or C Corp formation is tax deductible. That is pretty wild, but that's a great insight we have here. Number three, meal expenses.
Yeah, another one that again has been weird in the past few years, mainly because of COVID and the pandemic. Meal expenses are normally, if you're buying food for, the office, or you're having meal with your clientele for business, or even doing a meal to solicit clientele, all of those meals are generally deductible. There is a limit. The normal limit is 50% of all of your meal expenses or entertainment expenses. It's a 50% deduction. However, for last year and for 2021, but it probably matters more for last year, right? For most of our clients here, it's going to be 100% deductible just for 2022, and then for this year in 2023, it's going to be back to the 50% unless the IRS changes their mind.
2022, 100% deductible. 2023, 50%. Is that correct?
Yep.
Boom. Number four. And yeah, if you have other ones, please chime in. We have another question around home, but we'll get to as many as you can. Number four, equipment, laptops. How does depreciation fit in?
Yeah, I think some of the more common clients we have do like software consulting, or they do some sort of coding from abroad, and they're buying, expensive equipment, expensive laptops, really, intense computer setups. You know, those things are all ultimately going to kind of save you expenses in the long run because they're depreciated over time. And kind of what that means is, let's say you buy a laptop for I was thinking of a number and I was thinking that's an expensive laptop. Well, let's just say you buy like a $5,000 laptop, right? Basically, each year for the next few years, you're going to be able to claim part of that laptop's full $5,000 expense based on ultimately how long the IRS thinks that laptop is supposed to last. Every single piece of equipment has a different amount of time that the IRS says it's supposed to last. I think laptops and computer equipment, depending on how they're used, it's over, I think, 5 years or so. So if you have a $5,000 laptop, every single year for the next 5 years, you can claim about, I think it's about $1,000 each year in depreciation expense. So equipment, not immediately deductible, right? But in the following years, you're going to be able to kind of take advantage of that expense every single year until you're kind of out of it, right? If that makes sense.
Amazing. Next up, coffee machines. A lot of entrepreneurs are taking caffeine or drinking coffee.
Yeah, including me with my McDonald's coffee right now. Coffee machines are absolutely going to be deductible. It's the same concept as like equipment, right? It's the same concept as a laptop. If it's in the case of business and you're using it for business, it's going to be deductible over the course of a period of years, just basically as depreciation.
Business loans.
Yeah, this one is, I think, probably one of the most common questions that is like asked, because a loan seems like an expense, like you're paying someone money, but the reality is, loans aren't going to be deductible on a tax basis. Ultimately, on a tax basis, being loaned money and then paying the loan back, that really does nothing to your taxable income. So a loan itself isn't going to be expensible. But if you pay interest on the loan, right, this thing that you're sort of not getting out of the immediate loan, meaning, not getting out of the immediate borrowing of the money. All of that interest expense generally tends to be, deductible, depending on the type of loan. Loans are probably one of the more strange, and the IRS likes to target, when they do target audits, the IRS seems to like to look at interest expense and ask you about interest expense. So I recommend, if you're trying to deduct interest expense on loans or anything like that, please reach out directly to a CPA, because that's something you should talk about before filing.
Okay, amazing. We have a couple ones that just came in. Let's try to hit these ones as well. Home office slash home workstation.
Yeah, absolutely deductible. There tends to, because of the pandemic, and again, this is just kind of my opinion on how the IRS is probably going to treat it. In the past, home office deductions weren't, the highest risk kind of expense item in the world that the IRS worried about. Because of the pandemic, and many of us work from home, and work from home is kind of the new normal, I would say that they tend to care a little bit more about, the actual reporting of the expense and how you calculate it. The advice I have is that if you do plan on attempting to claim a home office deduction, or anything of that nature, because normally it is absolutely deductible. One is what I'll say, it's absolutely deductible. But two, you're going to have to kind of get a fair estimate, a pretty accurate estimate, I'd say, of, how much of your home office is actually your office in comparison to the rest of the house. I know that Pedro just posted, do we take the square footage of the whole house and deduct the office square footage? That's possibly a way we could go and calculate the ratio. There's different ways to kind of come to it, but I would say that's one of the more common ways. And one of the most important things is, that home office, it needs to only be used for work. It can't just be, you're also at your computer, checking social media, and you're on your computer watching YouTube videos after work, and it's kind of your personal office as well. It has to essentially just be your office space. And that's the only way that we'd be able to claim it as a deduction.
Fantastic. And one more question. This is maybe a bit more of a meta question. You had said that startup costs, even though they happen before the business is formed, are actually deductible. What about other expenses, which are business expenses? So in the categories you've listed that are deductible, which happen before formation, can you retroactively have those deducted? Or is there a timeline when, once it's passed, unfortunately, you can't?
I would say you can't retroactively deduct expenses that occurred before the start of the business, for the most part. Um, Obviously, startup costs and organizational costs, if it can kind of fall into that bucket within reason, yeah, it could be deducted, but it has to, again, be deducted in that initial year that you're creating your company, or else it can't really be classified as a startup cost. Um, so no, in general, you can't retroactively apply these things, like, if you're buying a bunch of meals, but you don't actually incorporate your company until September. A lot of those meals, I would say, aren't necessarily startup costs, right? But the reason why doola, or, if you have a lawyer that you spoke to, or if you had to spend money on training to set up kind of your business and do your business idea, those types of things, I would say, fall into that $5,000, limit of startup costs that you can claim in your initial year. So it kind of depends on the type of expense. And there's, you know, I usually trust business owners, and usually it's the CPA's judgment to determine, is this realistically a startup cost, or is it just, you know, you've been buying food or renting your house for the past couple of months before your business started. So it just kind of depends. I recommend asking a CPA if you're concerned or wanting to claim those costs.
Amazing. Thank you, Jiv. And just to clarify for folks, this video is going to be recorded and uploaded to YouTube. If you're taking notes, fantastic, incredibly studious of you, but you will be able to go back, watch the recording, and go through each of these line items. Next question, as we are approaching the half hour, we've gotten a lot of questions coming even now about when do you know / how do you know if you'll owe taxes or not? Some of the types of questions coming in. My business hasn't started generating revenue yet. I just started last year. I didn't get my EIN. How would you explain for folks if they need to file this year? What types of check marks or things where if you do check this box, you're going to have to file exist?
Yeah, so a lot of people may not like the answer, but the real general answer is you're going to have to reach out to your CPA or kind of get some guidance on this, especially if you're a foreign-owned LLC, and actually ask, have I, you know, you'll have to kind of detail your full situation for the year. Because the reality is this, especially for single member LLCs that are foreign owned. Generally, you know, a lot of our clients, they don't have to pay taxes in the US, and they technically don't have to file, you know, a true income tax return here, right? Because they're usually performing services out of this country, and not really based here in the US, even if they have a US company. But that doesn't mean they don't have to file something with the IRS, right? Something as small as, you know, let's just say you open up a bank account for a US business, even if you're not collecting any revenue or expenses for the year, that kind of transaction can be a reportable transaction for something like a Form 5472. And it's really, it comes down to CPA's judgment on, you know, is all this stuff you're doing for the business, even though if it's not generating revenue inherently right now, or you're not really spending any money on expenses right now, you still might have an obligation to file. So unfortunately, there's not really, especially if you're a foreign owner, there's not really a magic checklist on, you know, how do you know if you'll owe taxes or have to file taxes or do some paperwork with the IRS or not. What I'd suggest is, you know, if you have a CPA, just take and also you can reach out to me, just take the 15 to 30 minutes to hop on a call, get kind of the short discussion on, you know, have I done anything that's reportable for the IRS. The only scenario I'd say where, you know, you absolutely don't have to file and don't really have to worry about anything is if you truly have zero, kind of to get at Harry's kind of question that I just posted. If you truly did absolutely nothing with your US business, meaning you didn't even open up a bank account and send money over to it, you didn't even, you know, have a small expense, in that case, yeah, there would be no need to file because we would have nothing to disclose, right? But you know, if there's any type of transaction at all, I would just recommend asking a CPA about it first because it might be something reportable.
Amazing. Couple questions coming in. Very good questions on how can I chat with a CPA? Can doula help here? Stay tuned. A couple more minutes. We do have a special offer, and doula can help in some senses. So we want to really thank folks for sticking all the way here, and stay tuned. And towards the end, we'll be able to share some information on how you can get help with both of those things. In the last couple minutes here, we're going to jump to one more question, which is around sales tax. Question here, Jiv. Do I need to charge sales tax when providing services to US customers? What about product sales tax as well?
Yeah, sales tax. I mean, it seems to be like what a bunch of people getting into US business they think that's going to be the bane of their existence, right? Like, how do I charge sales tax on all these orders? It's going to be really annoying. The reality is, in the United States, we don't charge sales tax on services, right? So one, if you're a service-based business, and I would say for a lot of the people on this call or a lot of our customers in general, you are an online services-based business, or you do some type of service for people overseas, even if you have US customers, right, and you're performing services for them, that you don't charge sales tax on those transactions. Sales tax is pretty much, you know, for products only, and for products going straight from a business directly to the end consumer. So that's kind of why, again, if you are kind of selling to, you know, if you're selling to another reseller, well, in that case, you know, sales tax might not necessarily apply even if you're selling a product. What matters is, are you selling a product to an end consumer of this product? And so that's just kind of the first barrier, and kind of eliminates a lot of people's questions, since a lot of people are service based or they sell to resellers. So you all are going to be good. Sales tax, for this question, sales tax applying to digital products. Something that, again, hasn't been clarified in the courts with the IRS very well yet. But in general, each state has different rules on how they recognize digital products. I would say in general, if it's like an online platform or something that they access through the internet, that's not taxable. It's more akin to a service, like an online course. But when you start to sell downloadable software, or maybe you're selling your actual book and it's something someone can download, then I suggest reaching out to a CPA and asking, hey, is this state going to care about this product, even though I'm selling online, and do I need to apply sales tax? The last thing I'll say is just the threshold for sales tax in the United States is very large. It depends on what state you're selling products to. So, you know, I'm going to just kind of give a random example. But let's say you're selling products to California, right? Online, you're selling online products to people in California, and you don't have any physical presence in the state of California. Well, maybe let's say California has a threshold of $100,000. You're not going to have to start collecting sales tax until that first dollar after $100,000 that you sell to the next California customer. And every single state has a different threshold. Every single state kind of classifies sales tax differently. If you are dealing in this kind of volume, right, I highly recommend reaching out to us or a CPA in general to kind of get set up for sales tax in your record keeping, right? Because it is mainly a record keeping issue rather than a major tax question. So web and mobile apps do not count. I think, yeah, I would say mobile apps and web apps probably don't count. Now, Arjun, I'm just looking through the chat and answering questions.
I know there's a lot coming in. So
Yeah.
let's do one high level question just to summarize and clarify for folks. Assuming you clarified this, if you have 0 transactions in a year, that's the one scenario when you likely do not have to do a filing. However, if you live outside the US and you had a transaction, is it accurate to say that you likely have some sort of filing? And to figure out exactly what the filing is, you should chat with a CPA or do your research on your own, etc.
Yeah, I recommend absolutely looking into it. The list of reportable transactions is something that would be too long to cover on one of these webinars. Like there's so many transactions, even non-monetary transactions, that the IRS believes is something that you need to report if you're a foreign owner. And that's why, you know, I suggest, even unless you have absolutely 0 activity whatsoever, you know, absolutely reach out to a CPA. The only other thing I'd touch on lack of filing, I'm answering this question from the perspective of LLCs and partnerships and that stuff. But if you're a C Corp, if you're a C corporation, you have to file every single year, even if you do absolutely nothing. Just to clarify, C Corps are different. You have to file every single year. I just realized I didn't mention their scenario. So that's just the last clarification I'll put there on that one.
Incredible. We are at the top of the half hour. Here's what we want to do. There were questions that were asked. We want to make sure we can get to those. And for everyone for attending today, and there might have been some folks who actually attended last week. So we want to do actually a continuation of that. We're approaching the deadline for this specifically, but I'm dropping a link here to a free consultation link with Doola. In that link, you can go through, If you've already submitted your questions, great. We collected them before the webinar, but you can use this link to actually have a quick one-on-one convo to sanity check things. Oftentimes we see the questions and we are able to provide you with content or an answer beforehand. We know you're eager to get an answer. So first thing is, please everyone schedule here. We have open slots and we'd love to be able to help as soon as we can. We have slots around the clock. Second thing, there were a couple of questions on, should I do this on my own? Should I work with another company? Should I work with doola? At the end of the day, the reason why we do these sessions is we want to educate folks that compliance is something you should take seriously. Whether or not you use doola, whether or not you do it on your own, we care most about 100% compliance. People are aware of the downsides of not doing it and understand that they should stay compliant to have full peace of mind. With that in mind, doola does have a tax and compliance offering, which actually satisfies all of these requirements, keeping your books in order, state filings, IRS tax filings, chatting with a CPA as part of the process. For that, if you are a doola customer already, you can reach us out, or in your dashboard, you can access it. If you are not a doola customer, I'm sending a link here to our total compliance plan and package. Check it out. And again, there was a question here of, can I do this on my own? Like LLC formation, like setting up a bank account, you can. But what we've learned from working with thousands of entrepreneurs, this is a very time-consuming process. It can take well over 60 hours to do everything. It's very stressful too. It can be stressful to make sure you're reading the IRS forms right. And the biggest thing I would say is that your time as a founder is the most valuable asset. And certain parts of your business should be delegated. Again, it doesn't have to be doola. Maybe you have a CPA, maybe you have someone else, but our fundamental belief, and this is why we built the business, is we believe that founders should focus on what they do best: building, growing, selling, talking to customers, marketing, while doola handles the rest. And the rest there is this unsexy yet critical back office work that is required to keep your business compliant. I'll repeat that one more time. Please do schedule a link using this free consultation link. What we'll do is, and we said this last week, tax filing season is rapidly approaching. You'll see that there are certain prices on our total compliance page. And what happens is, at a certain point, we cannot accept more folks for tax filings. And that's because if we're going to do tax filings through us, through a partner, whoever it might be, they need time. If the deadline's on March 15th or April 18th, there's certain time needed. The application cannot come in the day before. So what we're doing is, starting after this Friday, there's going to have to be a one-time service fee or extra charge on top for these late filings in an expedited timeline. So if you are able to sign up or even engage the conversation, book that consultation, sign up by this Friday, February 17th, there will not be an additional service fee or charge. And again, our goal here is not to just add a random charge. This is so we can accurately and compliantly do the filings. Thank you so much, everyone, for attending. It's absolutely incredible to see this entrepreneurial energy from all over the world. Again, book that consultation. It was dropped there again. Thank you all for the fantastic questions. And if you feel like your specific question wasn't answered, please send that question in. We're working on creating more content. Subscribe to our YouTube as well. Drop that in here. This is where the recording will go. So I'm going to actually just quickly link to that. Give me one sec here. Boom. So there's our YouTube. Smash that subscribe button. You will see the video go there. And while you're on there, you will see other tax shorts and other just videos about doola. But thank you so much, everyone, for attending. And best part is, we will be back next week. So you can come to these every week. These aren't just for new folks. You can come every single week and become an expert on taxes too. And if there are any tax experts out there too, doola is hiring. We're always interested in working with fantastic, smart people across the world too.
Yep. Well, thank you, everyone. We'll be back next week, and we'll be answering more tax questions. So
I'll be back. Pedro, we'll see you next week. Love it.